thanks everyone for joining today for part 2 of the Treasury Summit. I think giving a little background, where we started 3 months ago, we held a little event called the Quarantine Summit, really to highlight fintechs and companies that were stepping up as the crisis started. And it seems like a lifetime ago already. It's only been 3 months, and I think part of the goal of this was to discuss some of the new rules that are emerging that may stick with us when the crisis ends. When the crisis ends is probably going to be a bit more difficult to predict. But I'd like to start with some introductions, just going around. We have Todd, Salim, and Nick Shep. And Todd, do you want to start and give some background as we go through?
Sure.
Cool.
Sure. So, and thanks for the invite, and thank you so much for organizing, Jeff, and the team behind Jeff. It's a great event so far. So my name is Todd Schweitzer. I'm the CEO and co-founder of Broncos. Broncos is an open banking enabler operating in Southeast Asia. So we have teams today in Indonesia, Philippines, Vietnam, and Thailand, a little bit in Singapore, but it's a bit of a different market. And what we focus on is really catalyzing the very beginnings of the open banking ecosystem in emerging Asia. And what that looks like kind of operationally is, on the one side, we work with financial institutions, offering a kind of an open banking as a service model, which is a very light kind of entry-level introduction to API products that can help them monetize. And particularly during the COVID situation, I think this is where banks are struggling, is they have a massive gap on revenue, but they recognize even more that they need to digitize, right? And so I think little by little, and especially kind of now in this situation, banks are realizing just how important it is to have an API product layer that connects to fintech partners, distribution partners, or even for internal teams to help them develop new digital products. So we help banks on the one side basically become API ready, right? On the other side, we work as an API aggregator for fintechs and any other online business that wants to consume bank APIs. And the typical use cases there are for payments, authentication, statement retrieval, and account data aggregation. And so that's what we do. I'm based in Manila, Philippines.
Great. Salim?
Hi, I'm Salim Dinani, COO and co-founder of BigPay. So BigPay, a challenger bank, Southeast Asia, and the key mission here is to provide fair financial services to everyone in Southeast Asia. And I think the real target market that we've gone for is the middle class in Malaysia. We launched in 2018 in January. We've grown since then, and we're expanding across the region as well. So we've launched in Malaysia and Singapore. We started off, it's very similar to what you've seen in Europe and North America around the challenger banks. We looked at Asia, 3-4 years ago. We said, okay, well, Asia's behind. I mean, the banks here haven't invested a lot less than we saw in Europe and the US in terms of their core stacks, in terms of, and Todd, to your point, right? Like, you're working with them on something so simple as open APIs, but it's a huge upside to the market. So we looked at this and we said, you know what? They're not going to be able to adapt because the middle class here across Southeast Asia, ASEAN, however you categorize it, is growing faster than almost anywhere else in the world. And with that comes demand for not just debit accounts, but for access to credit, access to investment, savings, moving money around in a really simple way. And this is a digitally native population. So that's really our target market. That's our mission. And so we've launched in these markets, and right now it's in Malaysia. And in Singapore, we've got remittance and our prepaid or e-money accounts coming along with our lending products in these markets as well. I think one of the key differences, just in terms of what we've seen, is that we are an open loop product as well. So we ride on the Visa, MasterCard rails as opposed to a lot of other players in this market.
Great. Thanks, Jeff.
Jeff, thanks for having me. Real pleasure to be here. Yeah, Niksheep Sherry. I run Asia Pacific for OakNorth. We are a credit analytics platform as a service focused on solving for mid-market lending. Unlike most fintechs in the lending space, who focus on more of retail, consumer, micro loans, we focus on growth businesses, scale up SMEs, say a restaurant business, 2 outlets going up to 10. They are with the incumbent banks today for the most part, but they tend to be treated as more of a smaller retail business. Get a very checkbox lending approach, a product-centric approach, rather than a bespoke loan structure, which they truly deserve. And what's unique about OakNorth is that we are while we are a platform as a service globally, in the UK we run a bank. So we are one of the 3 in the last 150 years to get a full banking license. Our banks are very profitable. We've lent about £4.5 billion in the last 4 years. We've done it with very impressive credit metrics, and we've been indirectly responsible for creating close to about 13,000 homes, 70,000 jobs in the UK market. But more importantly, I think our banks enabled us through our platform to test the hypothesis on a better serving an underserved segment. So bank in the UK and a platform as a service globally.
Can you speak to, in the US, we rarely see companies internationalize. And yet we see that quite a bit with companies that start in Europe and even expand to Southeast Asia. Can you speak to that? Why we may see that more frequently? We have a global audience today, a lot of American founders and companies that they may be interested in hearing that. Anyone can chime in on this question.
Yeah, I can go first. At least what I've been seeing, I've been in this market with OakNorth for 2.5 years. So really working across all of the Southeast Asian markets. At least tested all of those markets, though we're not live in some of them for strategic reasons. I think for us, I think what's clear is, at least what I've been seeing, is the UK market is a few years advanced from a fintech perspective, primarily driven by the regulations in the UK. If you look at when the banking license, the digital banks came out in the UK, right? So, and a lot of the markets in this part of the world are looking at the UK, in terms of how to essentially look at regulation around digital banks, technology. Just to give you an example, in Malaysia, they are giving out the digital bank licenses, and Bank Negara actually reached out to us to advise them in terms of the operating model. They're drafting the policies, and they just want to understand more about the operating model for digital banks. Therefore, I think there is advantage in terms of being ahead of the curve from a market perspective, which can be applied to Southeast Asia. But the flip side of that is, when you come from a developed market into an emerging market, then the questions come on, do you really understand this market? Is data really available? Are you going to be running analysis like the way you run in the UK, in like Indonesia or Malaysia, where the characteristics of the borrower or the business is very different, fraud, etc. And those are some of the pain points which we need to address when we have conversations with clients.
Yeah, no, I think Nikshat, I think you really hit it on the head there. On the last point especially. It is extremely different to launch a product in Southeast Asia. Like Europe, North America, they are definitely advanced. And I think, the experience, having worked in the UK, but BigPay has been born in Southeast Asia and has really grown in Southeast Asia. But we see it, like, you look at the kind of the regulations in Europe, whether it be the EBA or the FCA, and you see like kind of market-wide, prior to Brexit, you can launch across a market of nearly 500 million people, whereas you've got highly nuanced regulators and regulations in each of these markets, whether it be, to your point, with data regulation, whether it be to money movement. So as you kind of link about fintech, I think it definitely has its upsides, because they are quite far behind. There was a lot of headroom to provide these kind of products and services, but definitely something to look at as companies try to expand, is looking at the nuances, especially of the fringe markets, or I'd say like the non-Singaporean market of Southeast Asia.
And I'll just add, kind of because Broncos we started out in emerging, kind of the emerging markets of Southeast Asia, is that the benefit, the challenge, but also the benefit of a startup operating in in a market like Southeast Asia is practically from day one, you have to think internationally, right? And so you operate. Some would say Indonesia, if you're able to go really deep, that's big. That's a big enough addressable market. But really, if you're operating a startup in Southeast Asia, you have to think internationally from day one in order to capture a big enough pie. And what that does is it gets you comfortable with chaos, because as Salim said, there's a lot of nuances and differences between these markets on the regulator side, on the behavior side. And I think it instills in the DNA of a lot of successful startups in this region a DNA of empathy and sort of assume nothing. So because it's a pretty chaotic environment, and it requires a bit of that thoughtfulness around, how do we make sure that what we're building is not specific to a very particular Indonesian or Vietnamese use case, but actually is something that is solving a really kind of core infrastructure need across a demographic or across a, that's not country specific, right? So that and I think that's a commonality, and I know Salim, you've addressed that as BigPay has expanded as well, right?
Yeah, I mean, absolutely. I mean, not only do you see we're forced to almost address these points quite early on in in the scaling process, and I think the chaos is definitely something that everyone at BigPay will attest to, in the best way possible, because you are not only learning how to scale in terms of numbers within one market, within one set of constraints, but constantly keeping one eye on the ball in terms of what does it mean to expand into these other markets, which may not necessarily be determined because the regulatory landscape does not move in a necessarily a uniform way between these markets, and is highly unpredictable as well. So it's so if you're looking at multiple markets at one time, the market that you think you'll be launching in first isn't necessarily the one that you will be. So I think it definitely poses challenges, but also creates a set of almost a level of resilience in terms of organizational structure and organizational growth, which I think is quite.
I think the market fragmentation and the nuances also forces you to be highly focused and disciplined in terms of the choices you make and the markets you want to operate in. It's just that scale is an issue. Every market you get into, there are investments which need to be made. There is a lead time to even get into any of these markets, right? And given for a startup, that's money being burned. Therefore, I think you need to really understand these markets, identify commonalities, and then tackle them.
Yeah, I think when we were building Acorns, we were just in the United States. We complained a lot about having to apply in all 50 states and 3 territories for our broker-dealer permissions and our investment advisor permissions. Of course, it's really one market, but I think the notary that I went to next door, I think I was 90% of his business for 2 years. And but you mentioned earlier sort of a point about sort of discipline and resilience. When you take on that side of the business, something that we talk to founders a lot about at Treasury is, a willingness to actually dig into the rules, dig into the regulations, take on some of the infrastructure and plumbing when necessary. And a lot of fintech companies, I think, not to rip on Silicon Valley, but you have some companies that maybe more superficial and sort of less willing to dig into finance. What have you seen in terms of digging deeper into the infrastructure? I mean, is that sort of a core requirement earlier? Are there certain trends that our audience should be aware of?
Sure, I'm happy to take that one. Yes, absolutely. I think something. I'll go on tangent for just one second there. But if you want to launch a challenger bank or whatever a financial product in Europe or the US, you can get a BIN sponsorship. You can get a product launched very quickly, with the right level of arbitrage, whether it be regulatory or from a financial tech side, the underlying infrastructure side, right? You'll find a lot of these different companies, and there's some great companies, but I think there's a significant lack of that in Southeast Asia. So what you find is that you are going deeper, at an earlier stage, whether it be in terms of the licensing regimes that you go for, and that spreads deep and it also spreads wide, right? So there aren't even if you have one license, let's say e-money, you'll still need to kind of look at some of the other licenses around MSB, remittances, lending, because you do need to own that regulatory infrastructure. Also, as Southeast Asia, I think, really moves, it's not, in terms of payments, it's moving like, Todd, you talk about open APIs, but similarly, like the rails at which, a PISP or payment initiation services are running and the central banks potentially see them running are going to be around, the core RTGS systems. And fintechs are, if they're going to provide some of these services around, whether it be bank accounts or kind of interoperability, we're forced to kind of integrate and make those investments early, because that really positions us ahead of the curve as it does open up. So I think to answer your question in short, yes, absolutely, we've definitely seen that on a much higher scale than you would see in Europe and North America.
Yeah, on the Branca side, the phrase that always comes to my mind and that we hear repeated internally all the time is hand-holding, right? We're hand-holding the regulator, we're hand-holding our bank clients, and we're hand-holding our fintech customers to a degree that would be, well, frankly speaking, I think if a U.S. fintech dropped into Southeast Asia right now, it would be a complete blind spot, because the expectation is that their partners are able to operate here already, right? And that here means in terms of knowledge, in terms of kind of API integration capabilities, in terms of certain technologies that are sort of expected to be default in their stack. So, just as an example, right, we've had to build a regulatory affairs practice much earlier than we anticipated. And as an example, like tomorrow we're doing a workshop with the Central Bank of Thailand, and next week we're doing a workshop with the Central Bank of Philippines. Now, it's great that they're willing to like have an audience, right? But we are discussing with them basically, here's what best practices look like for open banking policy, right? In this, not really with a commercial approach, but just like, it's just, here's some good information and point you in the right direction so that there's a more competitive landscape a year or two from now, right? So that's on the regulator side. On the bank side, it means getting, and investors may not be happy to hear this, but like, if you're on the enterprise side, particularly for banks, you're going to be doing some services work, filling in the gaps. It's just, or you're waiting another 5 years for the banks to be ready after they pay IBM $10 million to fix their core system, right? So I think for me, the resilience and the handholding means working alongside the regulator in a very good intention, spirited way. It means working with the banks and solving their problems, which may extend beyond the core product to enable them to use your product. And on the fintech side, it means going way beyond simply check our API docs. And it's actually, it's a lot of workshopping with the user to understand and problem solve with them, right? And so we do a lot of that, more than I think I would have expected. It'll pay off, but that's the result of being very early in this market.
Yeah. So oh, sorry.
No, go ahead. Yeah.
Go ahead.
No, I was just going to say, I mean, what Todd mentioned about handholding, I think that's key, right? Even because the problem is the lack of uniformity in regulation in this region. If I work in the EU and in Europe across, right? I mean, things like GDPR, regulations around cloud, etc., are uniform. Whereas when you work in each of these markets, you need to really look into whether you can host data on cloud, whether what's the cross-border data transfer policies, etc., etc. And there seems to be a lot of gray areas, even for financial institutions operating in those markets. They don't necessarily understand what kind of data can be on cloud, things. So that's where the hand-holding comes in. And the regulators are following each other very closely. Like if you look at the regulators in the Southeast Asia market, I think they do look up to the MAS in terms of, how to get to that next level, right? So it's important to work very closely with the regulators, and obviously cross-reference. I think the advantage we do have is, given we run a bank ourselves, we've been very closely intertwined with the regulators in the UK. And we understand the nuances around the operating model, etc. And therefore, that's something which we've definitely helped us in this region.
Yeah, it seems the relationship, both in the UK and in Singapore, at least my experience, the relationship between regulators and startups is, a lot more proactive than maybe in the United States. Not that it's, it's bad here, but we're sort of on our own. And if we're technically in the clear, then we're good to go. And my experience in working with and meeting many of the brilliant people that work at the MAS. I was almost thinking they're too innovative, too smart, and if you want to promote, open banking, for example, can that really be effectively coordinated in a central sense, or do you need a bunch of engineers, hackers, and entrepreneurs working around it, whether or not the banks are for it?
Yeah, it's a complicated question. It's a good one, but it's a complicated question. I think so. Speaking for kind of outside Singapore, there isn't. This is unregulated territory. Period. Right? There are payment gateway licenses. There are banking licenses. Some of these markets have now launched virtual banking licenses, right? Which have lower capital requirements and a little bit more flexibility on kind of how the bank can operate. But in terms of kind of what API standards are, data privacy, as Nikshep mentioned, data privacy standards. This is all. It either exists in kind of ad hoc pieces across a handful of government entities, and it certainly is not uniform across these markets, right? I think Singapore is very active in pushing kind of a soft power approach, through MAS, through things like APIX, the API exchange, of which Brankas is a part, kind of trying to set an opt-in kind of open banking standard. But I think the answer, Jeff, is it's a dance, right? We have Indonesia and Philippines, for example. The central banks both have technical working groups on open banking policy, which they're going to be working on over the next couple of years. And then there are a handful of startups that are working on the very beginnings of open banking infrastructure. And then there are incumbents, and the incumbents may be banks, they may be payment gateways, they may be some license holder that acts as a gatekeeper for other fintech stuff, right? And it's a dance between incumbents lobbying, startups educating, and the regulators sort of forming opinions on their own and trying to develop best practices. So it's happening. It is mostly a bottom-up push. And I say that because, for example, Indonesia, their open banking and kind of open API policy roadmap has a 2025 target, right? So until then, it's primarily bottom up. But this dance needs to happen, right? Between the incumbents, the traditional, help them, understand how kind of a modern financial services is commercially valuable, startups that are lobbying for a new way of doing things, and the regulator that's trying to absorb it all.
Let's talk about another important part is, the backers of startups, the investors. In the U.S., we have a really well developed, venture capital market, and even in fintech, there are a handful of well-known fintech investors, but a lot of startups, a lot of founders are encouraged to not dig in too deep into finance. Oftentimes, if you're building something regulated, it's often discouraged, or at least it used to be. In your market, if there isn't a lot of clarity in terms of standards and bringing the right parties to the table to agree, how does that impact the funding landscape?
Just take a stab at that. I think the first thing here is that whilst there is a lot of uncertainty around how necessarily regulations are going to end up forming, it's not necessarily a bad thing, right? And the reality is that we've seen one or a few, not just one, but a few examples. The largest example was PSD2 in Europe around open banking. Now that alone has its problems. That is not a simple, problem that's been solved. And you're seeing that in Asia, and there will be a level of uncertainty because they're moving really, really quickly. And I think a lot of investors, a lot of venture capital understands the shifting dynamic of regulations in Southeast Asia. The ones that are actually putting their money down probably do and understand the nuances of it, to at least to a certain extent, at least to the extent that it's a bit of chaos involved. And so I think with that, as Asia grows and as the opportunity, especially coming out of COVID, like, just bringing that back to the first point, is that, coming out of COVID, Southeast Asia will probably grow faster than most other places around the world. The demographics here are extremely favorable. And so there will be a tolerance around it. So, and overall, as that understanding grows, there will be an understanding that, you do need to dig into the finance of it. You do need to dig into the regulatory landscape. You do need to dig into the infrastructure, dig deeper down to have a successful business, and also own a lot more of the real estate. So to speak.
I think all of the markets are eventually heading in the same direction, right? It's just a different level of maturity. So it's not about whether the regulation will change; it's about when. From an investor's perspective, I think, especially in a region like Southeast Asia, where obviously, people are getting more online, digital, it's a young demographic. I think the opportunity definitely lies. And I think that's where, I think the opportunity for an investor is.
Great. Well, we're getting close on time, but I have one last question to sort of focus, bring things back to our U.S. audience, U.S. founders, U.S. investors. How welcome do you think U.S. founders would be to look at expanding to Southeast Asia? And after you answer that question, how welcome do you think U.S. investors are? Is U.S. capital interesting and know-how? Is it or is it seen as a pain? Big talkers, too far away? How would we go around? And I'd love your thoughts on that.
Okay, yeah, I'll take a quick stab at it, which is that, so as Nikshep and Salim have said, I think the opportunity is massive, right? We're at the very beginning of a growth spurt demographically. Pre-COVID, most of the economies in Southeast Asia were growing around 6%. I mean, this is light speed compared to your typical developed market approach. And there are also big, huge fintech infrastructure challenges that have not been solved. Right? Yeah. Domestic payments has not been solved. Cross-border remittances are still, I think the total transaction cost is typically like 10 to 15%, right? Indonesia, Vietnam, Philippines, banking penetration is still below 40%, right? So big, huge, massive opportunities. But I was talking to a UK-based fintech founder in kind of a similar line of business, and we were joking that, he operates in a world of order and we operate in a world of chaos, right? And so I think for US founders or investors looking at taking their business into or their portfolio companies or encouraging their portfolio companies into Southeast Asia, I think recognize just how big the opportunity is. I think recognize that the timing is very good. A lot of the very beginnings of the infrastructure is there, but be prepared for chaos and assume nothing compared to what you take for granted in your home market.
Yeah, I think the first thing I would say there is I echo Todd your points, especially around the opportunity in Southeast Asia. I think that as we look at Southeast Asia, the fundamentals, so it's very easy. Going back to the earlier point, it's very easy to launch a financial services product in Europe and North America and in more emerged markets. When you come to these markets, I think that the unit economics change when you're investing in infrastructure, when you're investing in regulatory, when you don't have the ability to arbitrage your regulatory burdens. And with that, as your unit economics change, there's a need for different types of capital deployment throughout your life cycle. I think the startups across Southeast Asia, the ones that will rise out of COVID, the ones that are successful, the ones that are able to take in capital, are really going to have probably overcome some of these challenges in terms of what they need to do to kind of appeal to a mass market and have a good working product. So to American investors, I think there are people looking in this market, but ultimately the ones that are deploying capital in this market are looking at it and understanding the nuances. Back to the earlier points around what's needed to launch a product in this business in this market. So it's not when you're looking at the models of a UK fintech or a European fintech, it's fundamentally going to be different here. And I think, Niksha, to see what Oaks North's done in terms of how you've deployed in this market, you'll see many companies pivoting slightly in terms of what that deployment looks like in Southeast Asia. And as more and more businesses come in, so more and more, Western founders come over to Southeast Asia or the East in general, and as capital also moves, I think there'll definitely be a broader understanding and a broader range of investments that are being made across this market, not just in platform plays, but I think in the niches as well across all series of capital deployments.
Yeah, I mean, I'd like to add that, obviously coming from the US, the scale definitely helps. I mean, what we are seeing is in the US right now, we are willing to put in the dollars to invest because the market is massive. But what it also enables us to do is when we come to Southeast Asia, we can leverage some of those investments and products we've built and compare and localize it for these markets. Obviously, the way we serve these services markets is fundamentally quite different, but there are certain parallels we can draw. But I think that's where the advantage is, or at least that's the way we look at it, right? We build products for US to begin with because the massive market, but then you come to Asia very disciplined, identify where the cross leverage or the cross read is across these markets, and then target those segments.
I think also in the US, especially companies like Acorns and Robinhood or Stash, we started with an app first, a mobile first approach, and I think that creates a global awareness of your product before you can actually effectively deploy it internationally. And it's an interesting sort of problem to have because you can see where people want to download or try to download the product. Initially we didn't restrict it as much. You could download it sort of anywhere on Google. So we got to see a lot of people like, wow, there seems to be a lot of attention on new fintech products. We keep going on and on. I think we ended needed to end about 10 minutes ago. But it really struck me when I spent time in Southeast Asia for the first time of how big the market is, how talented founders are, like yourselves, and also the tendency in the US is to preach globally when we talk about changing the world or trying to change the world or making an impact, and yet to effectively do that, connecting with founders in other parts of the world more frequently is really a core part of that. Launching your company, the same brand in every country around the world may not be realistic. You may find founders that share a mission, and they may make great allies and partners. And so something that I think would be interesting to keep in mind is, there are a lot of founders in the US that need to connect with founders like yourselves and leaders like yourselves to really think globally. And, there's a lot of ambition in the US in terms of thinking big. But I think there's a lot of opportunity too when you connect, US founders with founders in other parts of the world.
Absolutely.
Cool. Well, thank you so much for joining. And I hope you all stay safe, and hopefully we don't have to do virtual conferences forever, but it seems to be working.
Thanks a lot, Jeff.
Right.
That was great. Thanks a lot.
Cheers.
Cheers, guys. Thank you. Bye-bye.